Welcome, Roberta, Tino, Sherry.
Great. Well, yeah. So COVID's in the news, and there's a lot going on. I wish I had the Marvin Gaye soundtrack to go with the subtitle there, because I think it's appropriate, because there's a lot of stuff. So let's come on. There we go. Okay. So we'll start with just a quick overview of what's going on across the globe. The two charts here, the one on the left is the 7-day rolling average of absolute cases. So this gives you an idea in terms of which regions of the world are most affected. There's been a lot of news for a while now with Europe. It appears as though they are just starting to turn the corner on it, which is good news. The U.S., we had a little peak a bit of a while ago, just like a week or two ago. Now it looks as though that things are beginning to move in a better direction. Asia has been somewhat, less affected. UK has been moving up, and then a lot of news about South Africa. So we'll do that. And then the chart to the right is these same numbers, but normalized on a cases per million people. So you can see that the UK is up there, and their line is pretty vertical. And of course, South Africa, this one is almost straight up. Hence a lot of the actions that have been taken to limit travelers coming into other countries from the southern part of Africa. So Omicron is in all the news, and it is the variant that everybody is watching. This chart over here on the left, I think is pretty interesting. The gray area is the original virus, and this is in South Africa. So it shows you the progression of how the virus has migrated and mutated in that country. And we've gone from the original virus in gray to a beta variant, which didn't get a lot of traction in other parts of the world, but clearly began or occupied a significant part of what was going on in South Africa for a while. And then the blue, I don't know how it's showing up on your screens, but the blue, lighter blue, is the Delta variant, which is dominated across the globe. The one thing that I want to point out here is that the transition from one variant to another generally has been measured more in kind of months. But here you can see the Omicron variant right here moving from virtually nothing to, at this point, this chart's about a week old. In South Africa over here, this one I picked up yesterday, it's 100%. That has happened in a matter of days. So it's really been stunning in terms of the spread of Omicron. And you can see again in South Africa, it's 100% of the cases. In the US, we're about at 2%. In the UK, it's about 1%, right now. So let's take a look in terms of how it's been affecting people. And this chart here, you can see the Delta wave as a means of comparison, sort of the same type of characteristics that we've been hearing about for a while. That is that younger people are less affected, older people are more affected. The good news with regard to Omicron so far is that patients are exhibiting less severe symptoms than Delta, and that's true across the age cohorts. You can see a little bit of an uptick in the very young children, essentially, from 0 to 19, but then it drops, going into the 20s. But the general statement of younger people are less affected than older people is still valid. However, we're only about 5 to 6 weeks, into this. And so we'll have to see how it plays out, over, let's say, the next month or so, to see if this curve continues to hang in there. But so far, this is really good news. And another another bit of information in terms of how things are affected. This is a chart that's taken from a lab experiments and a paper that documents the results from that in South Africa. The point that I wanted to get across on this one is that the blue dots here show the amount of protection, if you will, from 2 doses of Pfizer and for people having previous infection. And you can see that that is superior to just 2 doses of a vaccine. And this variant here was an early variant in the Delta, and the dots over here are showing what's going on with Omicron. And again, if you have the misfortune to have been infected, with COVID previously, like I was, you are still better protected than just having the vaccine. And this is something that runs cross current to a number of narratives that have been out there. But I think that, this is hard evidence, showing that previous infection does give you, a measure of protection that you don't get exclusively with the vaccines.
Bill,
the other thing,
can I just
yes.
ask, 'cause I think you had that. I mean, it's been how long ago were you infected?
July 2020.
So does that evidence have a time lapse to it or not?
Yeah, well, it's interesting because when I got the virus in July of last year, they were saying, well, your natural immunity only lasts for 3 months. I had blood work done in I think it was late November 2020, and my antibodies were still present. I had my annual physical in early February of 2021, and the antibodies were still present. There's also, the memory function that your body has with regard to T cells. So even if your antibodies, are reduced and maybe even disappear relative to the COVID virus, if you get infected, your T cells will respond. They'll sense that, and they will respond and begin generating antibodies to fight that infection. So I didn't say at the Holiday Inn. I am not a medical person, but I think that, recalling basic biology, the body does have a very strong memory for defense against infections. So,
Okay.
yeah. And actually, Mark, I'll get back to your point in a couple of minutes. But nonetheless, I think that this is important to know. The other thing is that there is a degradation of effectiveness of the vaccines against Omicron, but still, going back here, the impact of Omicron, the symptoms are still less. So even though it's, people get all excited, it's like, oh my goodness, the vaccines aren't working. Well, they are working, they're just working a little bit less. But at the same time, the pathogenic characteristics of Omicron are less so far. So once again, kind of all good news. So let me, kind of summarize a little bit here. So the Omicron variant originated in the Gauteng province of South Africa, which is where the capital is, Pretoria. South Africa, unfortunately, has a very low vaccination rate of only 25%. So initially, a lot of the cases were in the unvaccinated people. I still don't have any information in terms of what that breakdown is between vaxxed and unvaxxed as far as who's gotten it in South Africa. I know in other countries, vaccinated and even some people who have had the boosters, are showing infection. So it is an interesting bug. One of the fascinating things from a clinical standpoint is that Omicron has a common cold gene, which is not found in any of the other variants. And I think that you can deduce that that's probably a contribution to the fact that it is extraordinarily contagious. As I showed on the first chart, right here, it's like not many days, and South Africa was essentially overrun, by Omicron. So it happens, it happens very quickly. But again, based on the information that we have so far, really interesting point is that the people who have been admitted to the hospital in South Africa have generally been for other causes, and then they give them a COVID test, and it's like, wow, you've got COVID too. So many of the hospital admissions are for, again, incidental reasons and COVID, and then they find out that they've got COVID as well. So that's kind of another anecdotal piece of evidence with regard to the symptoms that they're having. Thus far, the average hospital stay is only 2.8 days as opposed to 8 days, which was common with earlier variants. And there's a pretty low percentage of people who are on ventilators. Some are requiring oxygen. There are a wide number that are just, don't need oxygen as well. But that's also, very good. And currently, it's a pretty low mortality rate. You can see over here in the chart, which is taken from a paper, by some South African researchers. You can see the humps, the first wave of the original virus in South Africa, Beta was a big deal, wave 2, and then the Delta, wave 3. The solid line here is the death rate associated, with these various variants. And then here is Omicron right here. Again, you can see, quite vertical in terms of its shape of the curve as far as, case expansion. But the death rate so far, and again, we're early into this, but the death rate so far has been very low for Omicron. So that's really promising. I think that we'll have a better idea in probably the next 4 weeks to see, because cases have increased, dramatically. Here, they're beginning, that is in South Africa, they're beginning to spread around the world, so we'll have a better understanding in terms of its, pathogenic lethality pretty soon. But so far, the evidence, looks pretty good. Some of the takeaways, from this is that, number one, it will be interesting to see if Omicron completely supplants Delta across the globe. But I think that you can count on, a large number of infections all over the place. The good news about this is that as Omicron spreads, and if it's anything like the experience was in South Africa, it will hit non-vaccinated people, probably faster than not. That in turn will reduce the host, the potential host population, which will get us to sort of global herd immunity a lot faster than, perhaps what was thought of earlier. And if the mortality and the hospitalization rates, continue to be pretty low, and the symptoms continue to be fairly mild, that's probably a very small price to pay for ultimately perhaps getting on the other side of COVID completely. The biggest question that I have down here is government policy responses. And, clearly here in the US, you see isolated, New York State, New York City, California have just reinstigated, mask requirements. Abroad, let me get my notes here. Abroad, it's been kind of interesting. I mentioned that Europe is turning the curve. And at this point in time, Austria, which was one of the tightest countries across the globe, is beginning to ease their lockdown restrictions. It's going to be rolling through the various provinces over the next couple of months in Austria. And but they're still going to be requiring vaccination, proof of vaccination or proof of recovery. Kind of getting back to your question, Mark, if you are vaccinated, that proof is only good for 270 days. If you are recovered, that is, and you have a PCR test that proves that, that's only good for 180 days. So you're going to have to continue, to show proofs almost anywhere. Many of you know that I was in Europe. I caught a good spot between the things easing up and things tightening back up, and so it worked out very well. However, I don't know if this is going to show up. This is my Vax passport in Switzerland. I had to show this everywhere, every restaurant, every hotel. You had to show this, or else you were not getting in. So that's sort of the magnitude of the response that's out there. Germany is also another, interestingly enough, also another very high mandated country. Their lockdown for unvaxxed people, which was really severe. You could only go to essential businesses like the store or the doctor. You could only visit 2 people at a time outside of your hospital. Extraordinarily restrictive measures in Germany. They're starting to loosen up, by that. But both Austria and Germany are. I heard from a friend of mine who has colleagues who work in Austria. Apparently, you will have to have the vaccine by February of next year, and Germany is contemplating the same measurement. So that is 100% fully mandated vaccine requirements. And then, of course, masks are pretty much required. Australia is another country, that has been like notorious for some pretty draconian measures with regard to lockdown and restrictions on mobility. They are starting to come out of that, now. But in certain areas, it's been like well over 3 months that they've been under severe lockdown. So, again, I think, the good news is that it looks like the symptoms associated with Omicron are not that severe. Whether or not, governments will kind of go over the top is probably one of the big questions. And, I think, Stephen, that's probably the big wild card for your presentation. But that's I think that is pretty much, yep. So that's pretty much what I have. I hope that's helpful for you all. Happy to take any questions if there are any.
I just wanted to add a comment about UK. I was in Royal Opera House the other night, and I was surprised that no one was asking for any COVID pass. And it's a very interesting situation here. Wherever you go, rarely you get a request to show COVID pass unless you go to organized events such as anything to do with business shows or concerts and similar. But otherwise, I was very surprised about opera. So yeah, interesting.
Bill, I think the herd immunity concept of getting there faster because it's attacking the unvaccinated is actually really one of the big wild cards as well, in addition to what the government's reactions are going to be. Because if we get herd immunity because it's really getting after the people who haven't been vaccinated, you're really solving a lot of the problems here. So it's a big deal, particularly if it's coming along with not as severe a health issue as we've had in the past variants.
Yeah.
Stephen, and I guess Bill, to that end, in terms of the health of the economy and things moving forward, wouldn't it be great if we started focusing on hospitalizations and deaths instead of cases, as we're seeing a digression from the cases and the deaths, assuming that this continues, right? Because I'll give you, for example, if you look at the New York City chart, not New York State, but New York City, you see 3 waves and you see it going up now. And that's in cases. If you change that chart to deaths, it is a flat line along the bottom. Mm-hmm. And so, which is because we're so vaccinated, right? And assuming it stays that way as the cases go up, I think it's probably important for people's sanity and for understanding the true nature of the problem to focus on deaths and hospitalizations. Because certainly, for example, that's what we focus on for things like the flu. And no one jumped down my throat. I understand it's not the flu.
Yeah, no, you're exactly spot on. Those are really the two metrics that people should have been watching all along. But cases are more sensational, so that's what you hear on the news. But
And Bill, even as you pointed out, the hospitalizations, we get reports about people hospitalized, but it's hospitalized with COVID, not for COVID. So I spoke to my South African friends yesterday, because I used to live there, and they tell me that, the highest percentage of people with COVID is pregnant women, right? Because they're going to the hospital and then they're finding out that they have COVID. That a lot of their offices got shut down because a lot of people had COVID, most of whom didn't know that they had it. They just got tested for it because they had to and found out that they had it. So assuming that and now these people are vaccinated, so maybe that's not the best, test for the country as a whole. But if it stays that way, then that is, good news and a reason to start sort of forcing the press and others to focus on the true danger.
yeah, absolutely. And, again, it's great anecdotal evidence to attest to the fact that the symptoms, even if you get it, are not that bad.
Yeah.
And I think it's, as Glenn Grossman, the last time we had him on, really said that we're on a path from pandemic to endemic. And it's just going to be like the flu or the common cold. I've mentioned this before, but the Spanish flu, the killer of 1914, still with us, but it's in the form of a cold now, not a global pandemic.
Hey, Bill, have you done any digging on the long-term effects of the encephalitis that's caused by COVID in some people, even if they're asymptomatic?
I have not. I know there's a whole host of long COVID symptoms that people are just beginning, to really start work on, and some of them are not too good. But that in particular, I have not, so I really can't comment.
Yeah, I think that's really interesting because I talked to sort of younger emerging managers, some of whom are managing billion-dollar funds, and that's their biggest issue, right? They can't risk anything happening to their sort of long-term cognitive capacity. It's a life income issue for them as well as current income issue. So they are actually being extraordinarily cautious despite recognizing all these other items.
Yeah, I think that's a good topic. I would have to get some really well qualified people to speak on that. It's by definition, it's an emerging field of study. I'm living with one right now. My wife has yet to fully regain her sense of taste. And again, we're over a year past, so it's not trivial.
Bill,
Yeah, I agree. I have a friend at KKR who's been going through the same for a year and a half, despite having the best, medical access. So it's not like money can buy you out of that long
Right.
COVID system either.
Adam, you had a question?
Yeah. Is there any indication that this is the end of the mutation?
It may not necessarily be the end of mutations. You look at the flu, it mutates every year.
Right.
So I think it's going to continue, but I think that the thing that people need to realize as well, and again, this is somewhat contrary to perhaps some of the implications of some of the narrative that's out there, is that in general, the biology of viruses is that they will mutate, but they tend to become less pathogenic, which is a better word to say than less lethal, in the sense that the general level of symptoms tends to go down. I mean, we'll probably hit something asymptotic, at the bottom, and then sort of bounce around there. But as you know, as far as what we experienced with the alpha wave, yeah, they'll continue to mutate, but they should mutate in a way that makes it, you know, continually less severe to a certain limit.
Bill, have you looked at the patterns for the COVID pandemic versus the Spanish flu? Because the little I've done on it, it seems like the timing of the last wave of the Spanish flu and where we are right now with Omicron is pretty tight in terms of 2 years after the start. Have you looked at that at all and seen, is there any sense of historical comparison?
Not carefully, but your intuition is correct. I think that the Spanish flu lasted for about 2.5 years, so we're almost there. I think that with this Omicron variant, most of the charts that I've seen show the Spanish flu in 3 waves as opposed to 4. But I don't know. I read something the other day that indicated that there might have been a 4th wave as well. But certainly it was not as big as what Omicron could be.
Mm-hmm.
Not necessarily is, but what it could be.
Thank you, Bill.
Bill, I have a quick question. Thanks so much for your preparation. It's so interesting. We do work a lot with the data, and I think it's a troubling aspect that the reports are always on cases instead of positive tests, because we know there are for certain errors with the testing, and that's a misleading kind of indicator. So I do hope that your reporting will improve on that. But the comment about 2 years or 2.5 years is interesting, as long as we don't see ongoing manipulation in labs of the viruses. It seems like perhaps we can project or predict viral activity, and that the increase of contagion is oppositely proportional to that sort of impact, the negative impact of symptoms and deaths ultimately. Do you see any modifications in the data? Are there any good sources of true data of actual cases rather than only the test results, positive tests?
I don't know, generally speaking, the best sources that I found, the Johns Hopkins dashboard, which seems to be sort of the source of almost everything that's out there, the Our World in Data, of which, that's my go-to right here, which is a collaboration involving Oxford University as well. They're great, and it's updated every day. So that's helpful. And then our old, friend, Steve Cucchiaro, who was on the first number of things, the IHME, as far as modeling and predictive stuff, it's better there. But
Okay.
I haven't found there's a lot of other data that's out there, but it's not refreshed as quickly as Johns Hopkins and Our World in Data.
Thank
So
you.
if any of you want to do the next one, you can just go hang out on those sites for a while, and that's all my secret sauce.
Thank you. Good preparation.
Well, thank you all. I've got to run to a board meeting. So, but great to see you all. And if apologies for tomorrow, this will be much of a repeat, but I think there's less overlap. But at any rate, y'all take care.
We'll send the recording out to everybody so they can ask you questions.
Okay, sounds good.
Brilliant, Bill. Thank you.
Yeah, thanks,
You're
Bill.
welcome.
Right, Stephen
Okay.
Burt, he's going to talk. I'm just seeing some people. Right before you do, Stephen, can I just use this quick window to people who are new that may not have introduced themselves to everybody, like Ellen from Journey One, if you don't mind. Hi, Eddie Bonaparte. Like that background.
Yeah, absolutely. So Helene from Journey One Ventures was hoping to come to the holiday party in New York, but trying to squeeze in as much work as possible. And raising funds right now before the holidays, so tight turnaround time. But I specialize in early stage cannabis investing, and I've been an operator and investor in the industry for the past 5 years. Super happy to help with anybody who is tangential to the industry or looking at any deals. Just did my initial close of the fund. I'm targeting a $10 million raise, did a close on $1 million.
Right. Do you play ping pong, Helene?
I grew up in San Francisco, and my
yes or no answer.
yes.
Okay. All right. Then you should come up. You could raise money and play ping pong at the same time. But Tim, introduce yourself real quick.
Hi, I'm Tim Garrett. My background's investment banking and consulting. Do a lot of work with early stage companies, growth stage companies in a number of different industries. So it's not so much the industry, it tends to be kind of the stage of growth with respect to where they are. So
Perfect. Stalin, or whoever is known as Greg.
Sorry, I was on mute.
So can you introduce yourself, Greg?
Hello. I'm a Canadian currently living in Colombia, and
Okay. What's your last name?
Vernon, Greg
Okay.
Vernon.
That's right. We've seen you before. Okay. And Stalin? I lost. Did I scare him off?
Did you ask me a question? I thought you.
No, not you, Greg. I was another person that was on here, just looking for new people. Byron, we'll see you tomorrow. Good to see you, Richard. He's down. And I think we're back off to you, Stephen. Go ahead. Sorry.
All right, great. So Bill Deukler did it again. Pulitzer reporting on COVID throughout the time here. Just fabulous information. So can't say enough about what he's done. I want to talk a little bit about the pandemic and its impact on globalization. And it's gotten a lot of discussion, and I hadn't seen any real reporting on it. It's really people just thought with the lockdowns that globalization's kind of ending and the trade wars and all that. But DHL does a yearly report on global connectedness, and I want to share some of the results of that. I found it an interesting perspective. So they work with NYU. So they've gone back to 2000 and have looked at the connectedness index that they created, and to give a sense of how the world is evolving. And we'll go through some of the historical periods here and what the implications have been. But the gist of it is that globalization is, not, declining as much as everyone would have thought. And we are a connected world, and it's going to be hard to put the genie back in the bottle. I think what's happening is there's shifts in where capital flows and where trade flows and people flow, but it's really shifts more than a great decline or an end. But we'll get to the reasons why. So the way they do the report is they look at 4 areas: trade, capital, information, and people. On trade, they're looking at goods and services. On capital, they're looking at foreign direct investments in total and in flows. Same thing with portfolio equity, stocks, and flows. And then in IT, it's really about bandwidth, telephone call minutes, research collaboration, and trade in printed publications. So how much is the research getting out? And then on the people side, it's tourists, it's international students, and it's the migrant issues that are out there. So that's the inputs that they use to come up with the report. And what you can see here, and it's really pretty fascinating, is if we look at the 4 areas, you can see in the blue line here, IT has been on the rise. And certainly throughout this period, you've seen how IT has moved, but it's actually kind of not been as strong, continuing to move up. It's actually just more like its historic norms now that we're moving further along. The big issue, the biggest one that got hit, is the people flows, and whether that was students or IT flowing back and forth. It was really, and travel, those were the things that really hit that area. When you look at capital, we had a blip in capital flows, but nothing really material there. And trade obviously had the short-term hit, but is moving back up. What is interesting though, and if you look at this from a historical perspective of these 4 periods, in the pre-crisis, great financial crisis growth period, that was really the BRIC stages when, Jim O'Neill made them so popular, and you saw the big rise of China and India, Brazil, and Russia, and you saw that move. That's actually kind of faded away the BRIC concept to really, a very divergent views of what's going on in those 4 nations. But that's what was the big play there. And you started to see that in moves. And what was fascinating was the people migration was pretty steady during that time as well. But really the big one was trade moving up and the world changing, but IT being the driver. Then we had the financial crisis. We had the hit to trade, obviously. You had a hit to capital, but those still rebounded. People flows were steady and information flows were steady. And then you moved into this volatile period of the recovery. And that's where things started to diverge as different countries took different approaches to dealing with globalization, and then moved towards the end of that period. And with the Trump administration and the trade war with China, you started to see some shifts in some of the areas, but IT continued to move up. But really the pandemic has really impacted the people flows the most. And we've seen a pretty nice reversion back to what we had as pretty close or moving towards pre-pandemic globalization measures if you use the DHL model. So the other issue is how do goods flow and how far are they moving? And what DHL looks at is, instead of trying to figure out regional or not, they look at the average distance that merchandise moves. And what you're seeing here is, it's moved up a little bit, but not really a dramatic change there. So, and part of the reason for that is globalization has always started with a very strong domestic or regional basis. And it was really not as big a percentage perception-wise as it is in reality, as it was perception, that we were still producing a lot of our goods very close to home, even with what's gone on in the last 20 years. So you haven't seen too big a change in this. We'll see more regionalization as supply chains move. But the other reason why it hasn't changed as much is the relationship of the US and China, where you started to see the shifts move. We had a modest shift away, but now we're starting to move back in tandem, because we realize that the 2 nations actually do need each other quite a bit as the 2 leading nations in terms of economic size. They're going to be relying on each other to somewhat. I think the big issue is, what does globalization look like going ahead? And do we move to a more bifurcated global economy? That's still to be determined, particularly around the relations between the US or the Western world and China as things stand right now. So the takeaways from their report are globalization is not ending. The trends have not slowed materially. Despite the supply chain and health issues, trade is moving back to pre-pandemic levels. Capital flows were impacted, but are rebounding quite a bit. IT continues to be a big driver. It had a big growth rate. It's slowing down what we had in the pandemic, but still very strong growth. The people flows are the one that has been most impacted. And I'm worrying about the buildup of when the people flows start to reverse, because I think there are potential for a lot of failed states and a lot of health issues are going to move people around. And that's going to put strains on a lot of economies. And we're seeing that in Europe right now. So I think the migration issues and politics are going to be a very big issue going forward once the pandemic is really behind us. There's not a big shift to regionalization. There is some. We're moving supply chains around, but supply chains move around and adjust pretty regularly anyway. They have throughout the period. And that's why Vietnam, Cambodia, and other nations were picking up even pre-pandemic, because they were providing lower wage labor relative to China. So that is always going to be a move that I think we're going to continue to see. So I don't think it changes the absolute amount. I think it just changes the locations a bit. I think China and the US flows continue to move back to pre-pandemic levels. and I think they can continue to move up. I think the issue that we're going to see, and this ties into the migration, is the world's poorest nations are being disproportionately impacted by this. So I think this is going to be an interesting takeaway and something to watch, because that's going to put some real strains on the system. The 4 vulnerabilities that still need to be addressed, according to DHL, is fortifying global and regional supply chains, getting the trade agreements right, and getting global institutions right. And that's the World Trade Organization, the World Health Organization, the IMF, getting them and their models to be upgraded to the world we're in today, as opposed to when they were created in the post-World War II period, I think has to happen. And we have to stop the world's poorest nations from falling further behind, because that's going to create more geopolitical and potentially military issues. And then the other one that's a vulnerability is around digitalization. I think part of the slowdown in digitalization last year gets into the use of cybersecurity for geopolitical means, and also the fight for economic and military power that's going to go on around technology is going to lead to a potentially, a Western versus a China kind of world, or some kind of formalizing of a binary world where the digitalization falls under 2 regimes is a potential. So something to keep an eye on there. I think as it relates to inflation, I think this is an interesting view. For some time, we've had the view that the 4 deflationary forces at work in the global economy pre-pandemic were globalization, tech, demographics, and debt. We think the bottom 3 of those remain fully significant deflationary forces. If DHL's reports right, then maybe globalization is not as big a inflationary force over the long term, and we may be moving back to a more deflation-prone economy after we work through some of the nearer-term issues. So why might we be more deflation as we move into the second half and get past some of this is you have the EM going through a tightening cycle. They've already been doing this. It started very heavily at the beginning of this year, and even in some cases last year. You're continuing to see the dollar strengthen. And as we start to do our tapering and even moving to raise rates, we're going to have a bigger differential, which should attract more capital to the US, which could create even more strains on the rest of the world. Supply chains are starting to ease. It's moving in different areas. You're seeing different pockets of it. It's also picking up in some areas. You saw lumber prices rise again, but the stronger dollar actually lowers commodity prices overall, which eases some of the inflationary pressures here. Inventories are rising as domestic production starts to come back online. So we are starting to see more production get back to where we were pre-pandemic, and that's going to ease some of the supply chain issues. Labor is coming back, and China managing for stability. They're not going to be pumping money into the global economy the way they have in the past to create more inflationary pressures. So I'm not saying inflation's not here. Germany just popped a massive number. We've popped big numbers in the US. The question is, over the longer term, when we get past the impact of the pandemic, do we start to see these secular deflationary forces take better hold and that become a bigger issue? TBD, we're too early with the Omicron variant. And also there's a lot of policy issues that still have to be resolved. I'd also add one more that I didn't put on the list, but if the Build Back Better program gets reduced, that's actually money that that'll take some of the inflationary fears off the system, depending on how much it comes down. And that could actually create some reduction of pressures in the US as well. So, we think you need to look past the headlines. What's below the surface is actually where the real money is going to be made. The volatility is going to be massive, we think, in the next 6 months in particular. It's good to be long equities. In our view, there's going to be a lot of volatility, but there are big opportunities being created. And we think the market opportunities are creating a lot of really interesting ideas in the small cap area in particular, but also in the mid cap area, which are much cheaper. And we think this is a tough trading area unless you're an exceptional trader. So we think the best way to play it is to go for the secular themes. And this is a good time to have a little extra cash because the volatility is from day to day is really pretty bouncy. And if you look at company by company, the moves are very different than what the index weightings are. So there are big opportunities to make money. So Mark, I'll stop there.
Great. So thoughts, questions?
Steve, did they say anything about sort of the situation out in California with the ports, or are people kind of coming up with workarounds and going to other ports, or I don't know, whatever they're coming up with, and how big of an issue do they kind of think this is and will continue to be going forward?
Well, interestingly, the port volumes are clearing. They're moving a lot of units through the ports now. They've had very big productivity changes on the ports. They've redesigned a lot of their policies and procedures. And while there's a lot of talk about the ships being backed up and moving further away, that was actually done by the ports for safety reasons, not for any other reasons. And I think the last number I saw is they're moving 12 and a half ships in, 12 and a half ships out a day. So there's a lot of goods flowing right now.
What's the baseline though? Yeah, what's usual? 20, 12, 5?
I don't know that number, but it was actually moving very much back towards the historic numbers. The big holdup they have is actually the crane operators who are specially trained to pull the containers off the ships. That's where they have a bit of a labor shortage, but they also did a lot of work, really the whole supply chain. They got together to connect the truckers to the rails to the ships and all the way through. And that's where they're finding a lot of productivity improvements. So they think that they're going to start to ease the port congestion, not quickly, but steadily. And I think that's really what you want to focus on.
Thank you. Very interesting presentation.
Thanks.
Stephen, I have a question. You mentioned digitization. We've seen cryptocurrencies fluctuate a lot in the downward trend of late. Do you have any comments on digitization of the dollar and crypto? Any thoughts on that?
I think every central bank's going to try and have a central bank digital currency. I think that the price movements in crypto right now are unexplainable to me. So I don't understand that. The people on the call who understand the supply and demand dynamics of crypto would be able to answer that better. I just don't have a good sense of where it all ends, other than I believe that the central banks will have an answer for the private crypto, and it's just going to be a question of how they're going to try and get their hands on everything to tax. So I don't know. I don't see how they peacefully coexist soon. They'll get to a good ending, but I think it'll be a bouncy run.
Fair point. Do you see digital US dollar in 2022? Is it coming that early?
I don't believe so. No.
Okay.
I think they have to spend more time on it and really understand the implications of it better in a global system. The Bank of International Settlements has been studying this for years. They're the central banker's banker. And I think the real worry is, how do you control your economies in terms of doing what the Fed's been doing through the pandemic if you don't control your currency and control your currency? So I think that's going to be the big issue they're going to struggle with. And there's also now growing concerns about the data that's available through different countries' central bank digital. If you're using digital currencies, what access the governments might have. So there's big concerns from the Western world about China. I think the UK head of the UK intelligence services put out a warning over the weekend about fears about what data China will come up with through their digital currency. And if they force people to trade in that digital currency, how much information they're going to have. And I think this is the area where we move to a bifurcated global economy in terms of a digital economy.
Superb. Thank you.
Stephen, what's your prediction for 2022? Maybe I'm jumping ahead, but I would like to hear your thoughts on.
Yeah, thanks for that question.
Okay.
I need everybody on this Zoom to answer that question. 361.com/2022. Go ahead.
I think the global economy is going to be strong. I think it'll be very uneven, and I think it'll be very volatile, but I think that you'll see a very strong economy, and particularly strong in the second half, which I think will lead to very good, relatively good markets, but it'll be a bouncy run. I think the debt issues are going to rise, and I think the emerging economies are going to have some really big challenges that are going to grow pretty rapidly, and I think that could lead to some spillover. I think South America is in a very difficult spot, and I don't know how we get through a lot of the debt that's out there. I don't think China is going to be a big problem next year because of their 100th anniversary, where Xi wants to get to with his agenda. So I don't think they're going to put a lot of surprises in terms of geopolitical stuff unless they're pushed to a limit. And I think Europe is going to have to deal with a migration issue that's going to be a real problem for them. And I think what's going on in the Ukraine and Poland is going to create some challenges for European economy that will be with us maybe for a couple of years, unfortunately. So.
And in terms of industries, which ones you see as great opportunities in 2022?
You know, I don't think, in spite of the valuations, you can run away from tech, but I would stay away from high multiple stuff in those areas. I just think the productivity changes that are coming, and you saw it with the port saying that, you know, and I heard one of the heads of one of the port groups in LA talk the other day, and the way they're embracing productivity. If you talk to business owners in the services industry, burgers are going to be flipped by robots. You know, we're substituting capital for labor at a rate that I don't think we've seen in history. And I think that's going to create a lot of opportunities and a lot of changes, but it's going to create a lot of disruption along the way. And I think it's going to accelerate again. I think now we're sitting on so much capital, but the problems of demographics for employers hiring people is so great that I think it's going to push them at an even greater pace to make the digital transformations that they've talked about for a while, but haven't really been forced to until the pandemic. So I think you're going to see an acceleration there. I think industrial companies can do well in this area. But I think the themes that we're investing in the public and private markets are really the same. You want to invest in the changes in improving health. You want to change the improving productivity. You want to focus on the AI and the areas that we've talked about throughout that we're all investing in. I think blockchain has its big time in the sun next year, because that's the real benefit of blockchain is I've always felt was for industry behind the scene, and it was going to be in improving processes and improving efficiencies, not as headline as it is for like Bitcoin, but what goes on behind and eliminating unnecessary steps that are just legacy steps, I think is going to be where a lot of people are going to make a lot of money. So.
Thank you. That's great to know.
Other questions?
Hey, Stephen, great presentation. Just curious if you saw the Fisher Investments research recently showing that there's actually no correlation between tech companies and rising rates. Seems to be counterintuitive to what's happening. Just was wondering what your thoughts were.
That I did see it. I think in most cases you can make numbers dance. Right. Obviously, when rates are moving up, the high multiple stocks get hurt, and tech stocks can tend to carry higher multiples. That's not an answer to the inflation question, but if you look back to when we started to have big rate increases after in the 90s and actually in the 2000s, the markets continued to do well after that. So rate rises aren't the issue, but I think tech is not a sector anymore. It's, even though it does have its own sector, I think it's everything we're doing. So I don't think you look at it necessarily the same way. So we're not running away from tech. We are running away. We are not jumping on high multiple companies these days, though, unless they have the growth rate and such unique position that they can back it up. And there are just a lot of companies that are really at nosebleed multiples right now. On the other end, I wouldn't be rushing to a lot of the lowest multiple stocks either, because I think a lot of them have fully earned it and don't have the cash flows to make the investments to compete going forward. And I think that's going to be the problem on the other end of the spectrum too, is why a lot of companies' stocks won't go anywhere.
Got it. Thank you.
You're welcome.
Other questions, comments, sarcastic remarks?
Somebody on the other side of from DHL, the globalization is actually ending. I would love to hear.
Yeah, some disagreement would be good here. Let's go.
I was actually surprised by the numbers from DHL, to be honest with you. When I saw the report, it was.
This is Tom. You really can't. It's unstoppable. I mean, right? I mean, we're a connected world, and it's going to become more connected. And frankly, all the big issues are global issues, right? The ones you outlined. I'd add in climate change and the aging and declining population. So, I mean, it's an unstoppable force. I think what's going to happen is there going to be kind of more points of influence, right?
Mm-hmm.
China, probably India at some point. I think some of the places that can claim a large kind of concentration of some of the critical kind of rare earths that are going to be needed, and then people that provide all the chips for technology, right?
Yep.
But it's just an unstoppable force.
I think the people one is the one we should be paying more attention to, and it's the one I think we pay the least attention to. And the reason I say that is our immigration discussions around the world are going to be the determinant of who's going to win going forward, because we are in population declines in most of the developed world, and in some of the emerging world, like China popped out of a terrible number for their birth rates. Japan lost I think their population decline last year was 927,000 people out of a 126 million person population. And they're projected to continue to run those numbers pretty steadily because they're an older, much older society and don't have a lot of immigrants coming in. I think that creates a big issue. At the same time, I think the migration issues we're seeing from the Middle East into Europe are going to continue to be a big problem. And the population growth is in there in Southeast Asia. So I think those two issues are going to become bigger issues, because the areas most hardest hit by the economic factors and the health factors are the ones with the highest population rates. So there's got to be migration, and we have to get a much better focus in the US on the right kind of immigration policy that's about the way that it has always been. I think getting students back here is going to be critical, and getting the patent flows back is another one. If we get too bifurcated in the global economy from a digital perspective, then you're going to slow down the pace of technological advancement, I believe.
Maybe one other point I will just contribute from a lower end or the earlier stage companies that are in tech, which, as you mentioned, tech is across everything. The tech overlaps on everything, is that we're seeing a lot more really early stage, even seed and pre-seed companies using developers from everywhere. It's never been easier, and to vet them and to understand who people are because of the digital social networks, I think is an interesting factor in this globalization of the tech side.
Yeah, it is. The other issue, though, that comes out of that is we're dealing with this new virus that's going through this through the tech world right now that we're trying to stop. That actually is one of the things that I think is the concerns about using cyber as a military and economic weapon is actually one of the things that's going to slow down the tech advances, because you're going to have to be so defensive in how you're doing it that you can't progress as if it's an open economy where you're not worried about where all the data goes. So, I think the data issue, if there's one area that is going to get bigger and bigger, the amount of data that we're going to have in the world is going to grow at such an exponential rate that, it's almost a slam dunk investment opportunity to just stay in the data themes, which take you through the chips and the whole.
In the trillions of connected things within the next couple of years. Yeah.
And the amount of exabytes and all that are growing is crazy.
Yeah, so I'm going to add on to that just real quick, because there's been some chatter about a lot of different European countries and different talk here in the US about data privacy.
Yep.
And there's movement right now to actually anybody that creates data off of an individual has to pay them. And that's going to be a big threat to the data area. So they're not going to want to collect as much as they can, because then they would have to pay to actually use it instead. So it's early discussions in that part, but that's the only threat in the data space.
Yeah.
Hey, Steve.
Unless you have consent, which is probably what's going to happen. There's going to be iterations on consent.
Yeah. So the privacy area would be the only threat to anything in the data space.
That'll be a whole industry that's going to develop of the people who can get consent from people to market to other people. So you don't have to go through that whole process.
I've got a small investment in a company doing exactly that.
What's the name of the company, Duncan?
Personal PDS, Personal Data Services. I'll send you a deck. They're looking for money.
Do they play ping pong?
I don't know. They're in Connecticut. They're not too far away, but it is interesting. I mean, their whole theory is that, just they use the example of, I don't know if you guys saw the Seeking Alpha article on GM today, but they were talking about GM building this whole business model around their data collection. And so, imagine this car driving down the street. It's doing a couple things. It's seeing things going on the side of the road, and it's also tracking the behavior of that person that's driving the car. That's going into some cloud at GM. Whose data is that? How do you use that? And so, the issue is somebody has to start tracking this stuff. And just, how do you trust whether that data is being used to your benefit, or if you're giving it to somebody for free, just as you guys were just saying. And,
just to put that in perspective, Duncan, BMW or Daimler did a study of self-driving cars. I think they had a fleet of 40 cars that they were tracking the data. And after, I think 1 month, they had enough data to stack CDs 60 miles high.
Yeah, it's an exorbitant amount of data.
Well,
per car, terabyte per data per day. Yeah.
As we move to autonomous everything, there's going to be so much data exchange and reliance and protocol. I don't think GM necessarily wins. I think wearables win. I think everything. Why does GM have to okay, they have certain edges, and then everybody should be a data company. But
yeah, I mean, look at Google's acquisition of Fitbit. Oh, I'm sorry. Google's acquisition of Fitbit, that was also a data and patent play. Apple was another contender for that. We also note Verisk acquired a company called Commerce Signals. That was a US federated data that provides for permission-based access and compensation for personal data. So look at Verisk as well and their acquisition of Commerce Signals.
This is what you do. You're a patent.
Yes, sir. We have data on this.
Why don't you help us create a little mini event to bring this to the fore? And
oh, good. Will do. I've got some predictions forthcoming. Yeah, based on our data.
Are you going to do a 2022 video? Yeah.
Yes, sir. Will do.
Can you do it today?
No. Tomorrow morning. I'll try to get up early to get it done, but we have a few sectors. Maybe I'll do a phase 1, phase 2.
Yeah, definitely.
But watch Verisk and Commerce Signals in this area.
Okay.
Hey, Steve, I enjoyed your summary of the DHL report. But for the nerds in the crowd, and you know who you are, is that full report available somewhere for people to download?
Yeah, I'll get it to Mark and Anessa to get out. I don't know. I do have it. I just have
If it's, I can find it. If you don't have to look
no,
for
no,
it. I'll look for it.
I can get it to the. I'll get it to Mark and Anessa. I just have to find the full one from it. So we
Thank
can
you.
get that over to you.
If it's easy, if not.
Not a problem.
Stephen, in that DHL report, the people graph, that's lower than 2001, if I recall correctly. Is that movement of people?
No, it's an index of people from three characteristics. It's tourism is the big one, and that was the big driver because international tourism was down 73%. It's now rebounding. The other is students moving, students, and that's actually took a big hit with the Trump issues that were going on, and the immigration policy issues. And then the third is the collaboration on research, and that is actually one of the other elements that was on the decline. And the collaboration on research obviously started with the digital divide, is where it's really starting to
got it.
But we did have that. The travel is the big one that dropped that one down, and we'll take longer to get that.
Huge change.
Yeah, but you close your borders. Everyone's closed their borders to immigrants too. So I think that's another element of it. And so you close your borders, and then kids not sure if they're going to have classes. A lot of parents aren't going to pay extra which have to pay for an international student for a education where they can't go to classes. So I think those three areas would make sense. You could see a rebound in that as we get through, particularly if Bill's right on the herd immunity element.
Thank you, Stephen. Great presentation as always.
Thanks, Adam. Tom, I have a question for you, Tom Jump. With the changes that we were just talking about on digital marketing and use of data, what do you see as the changes for that in the advertising world, and what happens to the Googles and the Facebooks and everyone else in that versus the traditional advertisers?
Oh, I think I'm on mute. Look, I think there's been in the digital world, I mean, they've been able to target like we never thought would be possible in the world of marketing, but the whole personalized is coming to broadcast, right? They're going to be able to, a lot of the broadcast and streaming service could already target individuals based on what they know about their purchase history, their demographics, and their lifestyle. So you're just going to see a lot more of that. I think the digital world is going to become more about the experiences you create that people want to engage in, and less reliance on kind of the retargeting that's reliant upon all the cookies that are going away. So the spending, if you look at spending in the digital space, despite all the concerns people had with Apple's changes, it's still growing at 3 times the rate of any other media, right? So we just live in a digital world. People are going to always be connected. So the truly targeted, the abusive targeting in the digital world is going to go away, but it's going to be based on just great experiences that people want to engage in.
Which means companies have to have a complete rethink of what they're doing there again.
That's right. That's right.
Right.
A great presentation as always, Stephen.
Thanks, Tom.
You're the highlight of the week.
I thought Bill was, to be honest with you. I found his more interesting, but always do. But thank you.
The problem with COVID is that, there's 30% of the people will never convince, right? To go out and get the.
You might not have to if he's right.
You have to rely on herd, right?
Right. Yeah. So it could take the political debate away if the rates of infection keep going the way they're going.
It just should be a lot easier if you had reasonable people.
Let me give you guys a trivia question. The vaccination rate circa 82%. I'm going to name 4 countries, and you tell me which one. So Israel, US, Korea, Russia.
Sorry, what's your question?
which country has, circa 82% vaccination?
Israel.
I know it's not Russia. Yeah, it was
Korea.
Israel.
Either Israel or South Korea.
South Korea.
Yeah,
South Korea. Nessa tells me if the government tells the Koreans, what is it you said, Nessa, that you need to take 5 shots, they would take 5 shots.
Yep.
We're too independent.
Well, that's
We've created this monster, right?
yeah.
It's self-inflicted.
Well, we might get lucky with her, but it's interesting.
That same monster is what creates all the innovation.
I'm with you.
Entrepreneurship.
Yes, absolutely.
You got to feed the beast. You just got to feed it better.
You just have to live with the consequences, right?
Yep.
As ugly as it might get. So I'm with you. I'm all about innovation, right?
Yep.
And that's why I'm still bullish that,
That's the most deflationary thing we have.
every product category under the sun is driven by innovation, right?
Yep.
It sounded like there was a big some kind of a collaboration project that on the Omicron virus between Pfizer and was it AstraZeneca or Moderna? They just announced it like a couple days ago that I saw an article.
I'm not sure on that one.